Nvidia earnings appeared to save the market, but then the stock market crash had something to say when it really goes back into what the Fed has said today, because again, they made a lot of comments about the uncertainty of the market and how we're moving. And then also, as you're pressing forward, it's important to understand that we are no longer expecting a rate cut going into December based off of job reports this morning. So as we look at the market as a whole, we are in a very bad spot. And I'm going to tell you, if the level that we're at right now breaks, you could expect some dramatic selling to continue going into December as well. Let's get to work. Now, again, we have a lot to cover here with what's happening with the Fed, and we'll go right into that first, and then we'll go more into trades, plays, etc., and everything in between there as well. So the first thing I do want to talk about is going into what the Fed has said. Now, first things first, again, Lisa Cook said this earlier, and this is about the time the market started taking a pretty big hit. Fed Lisa Cook warns of a possible market drop. Is copy and paste this off of Twitter. Okay, so it's on Twitter as well if you want to go read it. Fed Governor Lisa Cook warned that high valuations in stocks, corporate bonds, housing, and leveraged loans increase the risk of sharp market declines, though she said the financial system remains resilient. It's funny enough, when she said that, the market literally, quite literally, immediately dumped. Thank you, Lisa Cook, for that sharp market decline. She also highlighted liquidity risk tied to hedge funds growing in the role of treasury markets, and said that private credit is not a stability threat, but it should be monitored. Cook added that AI could be both improve and destabilize markets, talking about unemployment and jobs, noting that its impact requires close watch. She did not discuss monetary policy. Lisa Cook, we thank you so much for absolutely ruining the day there. It was beautiful. Thank you. Now, a step further, going into what's happening and why the market is showing a lot of weakness. Now, obviously, you're having the bigger tools from what's happening from the Fed. Job numbers came out, and again, they were pretty solid. Fading rate cut expectations based off of jobs. The primary driver for the Fed's side is the crumbling expectation that the Federal Reserve will deliver another interest rate cut in December at the meeting. Probability dropped dramatically, falling below 40% from, I think it was like 80% yesterday. So again, very dramatic. This shift is partially due from comments from various Fed officials who have pushed back against further easing, saying it's likely appropriate to leave rates steady for some time due to concerns of persistent inflation. Again, we can cover CPI all day long in inflation numbers. It's still tracking to the downside. You had a little bit of a surge, but again, when you look at CPI, it's still tracking down. So worth mentioning. Again, it looks like they're going to be late once again, which will just cause unnecessary pain in the market. Stronger than expected jobs data, which is what we just discussed. This release delayed some September jobs report due to government shutdown, came in stronger than expected at 119,000 new jobs. The resilient labor market makes the case for a rate cut weaker, and because we've also talked about this, the reason the Fed is cutting is just solely based off of jobs. And as the Fed has been cutting rates to shore up the slowing a job market, the stronger data suggests less needs for immediate stimulus. Again, they should wait until things get bad, and then they'll start doing some stuff once again, because that's worked for them so well over the past few years. So well. Split among officials. There's a notable sharp split among Federal Reserve officials regarding the need for December rate cut, which creates uncertainty. This, again, we saw this from Fed minutes and what was happening there as well, but that is where we're at right now. The selling pressure is being exacerbated by issues beyond the Fed. AI tech valuations concerned, which is what we were seeing the dip previously in this week. What's happening there with high valuations, artificial pumping these stocks, etc. Again, the Bitcoin crash, which is showing that there's a giant risk off mentality coming in, shifting into the market. So again, where we're at right now, and again, running through that as quickly as possible. Again, if you want to get more of these updates, what's happening as far as news is concerned, charts, etc., it's all on Twitter as well for you. The link is down below. And if you want to see exactly how we're trading all day, every day, again, the link for Discord is down below as well. Take advantage while you can. Again, you get all of our trades, everything in between, all the setups every single day. Again, today wasn't a lot of options trading or anything to do with stocks. It was all futures. And again, futures were they were pretty awesome. Again, we got pretty crazy. So we had some really nice downside there as well. But let's get to the charts. Now, also too, guys, I want to give you guys a quick shout out to what's happening at Top 1 Futures. The link is going to be down below. This is a straight to funded prop firm, to give you a heads up. And they're having their biggest sell. When you use my code, I believe it'll go up to 60%, code HEFE, JEFE. But again, this is the cheapest straight to funded that you're going to see when it comes to any prop firm out there. Check them out. The link's down below. Literally under $300 for 50K straight to funded is nuts. Even the 150s are crazy as well. Check them out. Let's get back to the video. Again, as you can see here, ES and the NASDAQ are just getting hit. They are just getting whacked, and it looks like there's no sign of any relief. I mean, let's go to SPY first. So SPY ends up gapping up, and funny enough here on SPY, as you can see here, going back over some of the levels, and let's just go through this together real quick, just so you can see things a little bit more clearly as we remove some of this. Again, where was the big level that we needed to get above to be bullish? Again, we made this very clear in yesterday's video, was right about there at basically 674 roughly. As you can see here on the day, you get above that level slightly for the first hour and then reject back underneath. And now we're moving back down to this zone that we talked about as well, where you have all your support really down here into 652 to 654, give or take right now. And that is really where you're coming into as we speak, and you're finding some buying off that level there. Now, again, you've seen the wicks going back into September and October. So again, it's not surprising that you're trying to find buyers here. But again, this was a very aggressive sell side move. Okay, very important to understand that. And when you go to smaller time frames like the 5-minute, this is more concerning, is that you're not seeing any buying. Like, this is the bad, like it was straight down. So there was no resiliency. There was, and this happened literally over the course of like an hour to 2 hours. So 9:45 literally until 11:55. So 2 hours of just straight downside, not seeing buying, not seeing a bounce, nothing, right? Not finding any support. And when you go into futures, I think it makes it a little bit more clear as you look at ES, because you went through all these major levels very, very quickly. You had some break and retest, but again, it wasn't really much to see. And now you're just dropping even further. So again, very important to understand that. Looking at Qs, a straight shot down. Now, I will say, if we can hold up, if we can get back above like 592, you start pushing back up. When you drop fast, you can go up just as fast, but it's important to be aware of where you're at right now, right? And again, you are dropping significantly. And again, if you look at QQQ, very similar type of support here as SPY. So again, this is a level that you need to hold. Very important to understand that. You also have, I believe, your 100 daily moving average right here. So look, you can go into here, go to 100. I don't use the 100 as much, but it's still significant. It's just not as one of your key ones back as this. Again, bring that up. You can see your 100 daily moving average on Qs are there. You go into ES, you're at it right now. Your NASDAQ, you're there right now as well. But again, what you're putting in as far as the daily candle is concerned, as bullish as I want to be, it's very difficult to be bullish right now, because again, you're just forming a complete bearish engulfing candle, dropping through the 100 moving average. Unless you can find some aggressive buying here, unless you can see buyers step up, which as of right now doesn't seem like it's going to happen, again, you have to assume more sell side is going to pursue, especially holding below this as well. Now, again, you can also see the key level here as well of around 24.3. You need this level to hold. If you start getting below this, you're going to drop down, in my opinion, towards 24,000 on NQ. The relative level on QQQ would probably be to look closer towards 583 to give you a visual of that as well. What I'd be looking for there. Going into SPY, again, coming to your 100-day right there, so around 652, maybe 650. Going into ES, your next level will be down here as well. You can see some of the levels you have marked out. You haven't come all the way down there yet, so you still have room to 65, and then ultimately down to 65.25 as well. And that is where we're at right now. Now, there's another massive part of the market that we have to be aware of, okay? And this is SMH. And I think, again, I talk about, I try to be as unbiased as possible here on the channel. And when you look at where you're at on SMH, we need to understand this is a massive level as well. And we basically have been playing a game of Pong going back and forth from basically 330 and to 350. And this is your semiconductor ETF. And if you start losing this, you have, 15, 20 points of downside potentially here. And again, this would spark some sell side. Now, why is SMH key? Why is it important? Because this has been your backbone of the market, right? If you look at what's carried you to where we went here on NASDAQ, if you look at what's carried you from yesterday into today with the gap up, it was semiconductors. And now semiconductors are again breaking some significant levels here. So again, you can see you're pretty illiquid back down towards 315, 317. This could get ugly very, very quick. Your next really big support's all the way down near $300. So again, that would be almost a 10% drop on SMH if we started declining like that. Again, I'm not saying that's going to happen, but I think it's something that we have to be paying attention to and we have to be watching right now as well. Because again, this is definitely very, very concerning. Okay. So very important to understand what we're looking at, why we're looking at it. A quick look at Bitcoin, what's happening there. This was one of the biggest red flags of the day as well. Bitcoin didn't even bounce today, despite the stock market, rallying almost 2% overnight. Again, Bitcoin did nothing. Bitcoin's absolute dog shit right now. Shout out to Tom Lee for telling everyone Ethereum high probability to go to $6,000 by the end of the year. Craziest thing I've ever heard in my life, probably. But anyway, shout out to Tom Lee for that one. Again, everyone defends him too, which is the craziest part. So anyways, Bitcoin coming down to support 83K into 75K is a giant weekly demand. You literally go to the weekly here, you can see what's happening here. So again, a giant. Honestly comes down even further. Sorry, I should adjust this a little bit more, like right there. Again, this is nasty. So again, you have no support down here on Bitcoin. And again, I'd have to anticipate you're getting more selling here as well. So basically all facets of the market are seeing aggressive selling right now with no real sign of buying. You go into IWM as well. And again, IWM is at 230, but again, you are just curling down. And in my opinion, you lose 230 here. We're looking for 220, which is your 200 daily moving average, which has to be our target here as well. So as we're starting breaking basically all these breaking points in the market, again, you're getting to this level like, okay, sell side, this is concerning. Okay. Now the question is this an overreaction? Is this a buy the dip opportunity? How do you approach this? Now, again, for me, I've been very clear where you get really bullish on the market. Once again, being as clear as possible, hide this, is if you can get back above 25.4. That's where you would have got more bullish. And again, we just didn't make it there today. You got into like 25.3, just didn't make it all the way back up there. But again, so far we're rejecting. Now, another key thing to look at is the 4-hour chart, because again, you are still following the downtrend from all-time highs as well, of lower lows and lower highs. This is also the very definition of being bearish in the short term as well. So again, you can see that we're still in this downtrend, still pulling back. And again, you just made a lower low. So as you're looking at this, again, right now, if we start holding below the 100-day moving average, I'm looking for a deeper pullback as well. But again, you are at some support near 24.3. I just don't think buyers are going to be able to hold this up. Another area as well is the Dow, which again had been a pretty significant and strong point of the market, but again, now you're losing major levels as well. So all the strength that we've seen, in my opinion, has just cooled off, and now you're seeing a lot of weakness, and that's what's really shifting. The biggest thing I'd be watching as far as stocks are concerned are going to be SMH. The other part would be tech, which is XOK, which again, you're already breaking down as well, if we can really see here. So you can see XOK was a similar type of range right here to here, as you can see there, and XOK is already below that. So this again is the tech ETF. SMH is more focused solely on semis and the big semis out there. So we can see as tech is already dropping dramatically. So again, where we're at, if we can get back above and back into this range, we can talk about finding a bounce. But until then, as of right now, this is a giant sign of concern. And again, this is definitely different than anything that we've been seeing, because it's important to understand what's being said and who it's being said by. I think that's something that we have to always be thinking about as well, because a lot of people talk, a lot of people post, and a lot of people say crazy shit. It doesn't really matter. But what really matters is when the Fed starts to put this type of fear and starts basically saying, well, we're not going to do anything right now, because again, that will spark more fear in the market. And again, it's not really giving investors a point of getting a reason to really get aggressive, especially if we're not going to be cutting rates at all right now. So again, that's where we're at. And this is why, in my opinion, this is different than, again, the past few weeks, because now you got the Fed on the side of like, okay, we're not going to do anything. We don't like this. Really all we see is risk associated with the market right now. And again, I would be willing to bet that Donald Trump makes some crazy statements over the next 24 hours talking about the Fed and calling them all idiots. That would probably be clockwork. Now, again, going into some of the trades, some of the setups in the market right now, it's pretty weak. Okay. My number one name would probably be Meta on the downside still. You start breaking below 570, you have the gap filled down into basically 549, almost a $20 drop. Again, still looks pretty good. A lot of weakness, rejecting off of 601, couldn't get going today. That is pretty weak. You could also go short if you break the previous lows that you established here as well from yesterday at 581. That'd be a decent short opportunity. Palantir's finding a lot of weakness going through basically everything. Your next major supports down here at basically 150 to 149, and then your 200 daily moving average. I'd be watching that as well. Amazon is literally the weakest stock in the market. I make it make sense. Again, you're breaking down, you're looking for the 200 daily moving average around 215. And honestly, this is probably one of the better setups in the market right now. It literally looks terrible. One of the worst setups in the market right now. And again, Amazon is nothing but weakness here. I'd be looking for that drop down towards 215. Again, that's going to be your bread and butter, which you're looking for there as well. Tesla back below 414 as well. This is the easiest chart in the world to track. Above 414, go long, below it goes short. And again, it's played out pretty damn well. So you have a little bit of a support that's kind of establishing here near like 397, 398. But in my opinion, you have room back down to 384 and into the 380 level, and then ultimately towards 360 as well, if selling continues being aggressive. And literally as we're talking, you're breaking that significant level of 24.3. So again, you need to see buyers get above it soon, or it's going to get really, really ugly. Going into a few other names as well, as far as weakness in the market. And I'm going to tell you right now, if I'm focusing on the market at all, it's focusing on the weakest names out there. Another big name right now is going to be AMD. AMD got back below 227, but you're also back below this key level here of around 214. I think this goes all the way back to like previous all-time highs. But again, marking this out so you can see, you're actually rejecting off it right now. You have the gap fill all the way down towards 185, 187, actually a little bit lower than that. Just to give you a viewpoint, down to 160, 170. I'd be watching this because you're great. You're very illiquid, especially when you get below 203. A lot of people are curious about NVIDIA, but I'm not super, this isn't really a short trade for me. You're still very close to all-time highs. You're back in your range here from 174 to 184. You can't really do nothing with that. If NVIDIA were to lose like 167, I could see us getting aggressive down to 150, but until then, there's no real trade out there for me. Netflix continues to be very, very weak. Again, the split really did nothing for the stock. Again, it just made people that are broke be able to short it, so I guess that's cool. But again, if you get below this level here around 106.5, you have no liquidity down into $100. Again, this will be absolutely disgusting, so definitely worth mentioning, worth watching, and what I'd be looking for there. But again, these are just some of the bigger opportunities that I'm looking at as a whole as the entire market continues its decline down. A lot of people are curious about Google. You're still sitting above previous highs. You can't really do nothing there. So again, no reason to get crazy. Again, a step further as well going, I'm trying to find some weaker names out here, but there's really nothing that I'm like crazy about going short on here. As of right now, again, these are the biggest plays that I'm the most interested in. The biggest thing I would be doing, like I've been saying though, is watching SPY, watching where you're at, because if you start to flip these levels, selling is going to get aggressive. And again, we haven't really seen aggressive selling. I think today was your first real sign of aggressive selling, of real fear that's out there in the market. You literally went up from being up 2% in the market, 2.3% in the market, to now you're down literally 1.8%, going to be down roughly 2% of the market. So around a 4 to 5% swing in the market, which is absolutely insane and very aggressive selling. The last thing that I will mention here for you is going to be overall volume. And again, it's very concerning. So if you look quickly, like the 2 hour, let's go to like something like NQ here. So you can see, let's go to the 15-minute. So again, intraday action, I'm just going to drag this up. This is the action that you had so far in the day as far as volume is concerned. You can see we open up, and then when that selling kicks in, it gets actually higher than we had at our opening range. It'll probably be higher than we have the closing as well. But again, and that stays there from essentially 10 o'clock at peak volume all the way until basically noon. So again, the selling was very aggressive. This wasn't like a rug pull. This wasn't like a quick drop. This wasn't a little knife or a trap. This was aggressive, aggressive, aggressive selling. Again, might have triggered it. I don't know. But again, what I'm looking at, what I'm watching. If you have any questions, comment down below. See you guys in the next video. Have a good one, traders.